Good morning, good afternoon, and good evening, depending on where in the world you are watching at the moment. My name is Christelle Cachico, and I'll be your webinar facilitator today. Before I formally introduce our guest speakers and get us started on the key updates for the EU to ANZ trade lane, here are a few housekeeping items to be mindful of. Firstly, please input all your questions on the chat box below and we will go through them during the Q&A session later on. Secondly, take a few moments to please complete the feedback survey after the webinar. We really value your feedback and we use it to improve our future webinars. Thirdly, a recording of this webinar will be distributed to you via email by the end of this week. And lastly, and perhaps the most important, if you have any questions at all about the information that we share with you today, please don't hesitate to contact your local Mondiale VGL representatives because that's what we're here for. We're here to help. So now on to our guest speakers. First up, it's my absolute pleasure to introduce Roch Levine, Director of Business Unit Oceania at CMA CGM based in Marseille in France. Roch has over 10 years experience in the supply chain logistics industry with a focus on consultancy and operational transformations. He is here to provide some insight from the perspective of shipping lines. Thank you so much for joining us today, Roch. I'm also incredibly pleased to introduce our guest speakers from the Mondiale VGL team. We have Andrea Gandolfo, Regional Director of Sales and Business Development for Europe, based in our Italy office. We also have Chris Marchio, Tradelane Manager for Europe, based in our Victoria office in Australia. And last but not the least, we welcome Lara Dawson, Tradelane Manager for the Mediterranean, based in our Auckland office in New Zealand. So let's get started. Let me pass you on now to Andrea and Roch so they can provide us with an update for Europe.
Thank you, Christelle, for the kind introduction. And I feel I have to apologize right away because we try to put a lot of information in this presentation. And I know it's a short session and we got a lot of things to cover, but it was important to put everything in the presentation because you'll understand how everything is so interconnected with within our industry. And I'll let Roch take on this bit so we have a better understanding on the current market condition from the volume perspective. Roch, over to you.
Thanks, Andrea. Thanks, Christelle, for the introduction. Really happy to be there. Just talking about the market globally, what we are seeing is really a strong recovery after the first global lockdown that happened last year. We are seeing it around the world. It's not just linked to the consumption in Australia or New Zealand. It's everywhere in US, Europe, everywhere. So the same situation is happening, triggered by massive political incentive, inventory shortage, and increased spending from the people everywhere in the world. What does it mean for the Europe Med to Oceania market? Is an extra 2,000 TEU per week demand from Europe to Oceania. Andrea, if you want to go in the detailed figures.
Yes. I wanted to show you some of the numbers that we have in the next slide, because it's important to understand that the major trade, Europe and Asia, and keep in mind a lot of the European cargo used to go by Asia. And we've seen a growth of 14.2% in the Europe to Oceania, close to 17% in the first quarter from Asia to Oceania. And as we said, I used to go, some of the cargo used to go by Asia because a lot of the services that pulled out from the Oceania trade are not servicing Australia and New Zealand anymore. So we have the two challenges. So it's not just the less capacity available, but the significant increase in volume has had a big impact in the trade. We want to move to the next slide now, and I'll leave this to Roch.
Yeah, thanks, Andrea. What we believe is interesting to highlight is the space availability in the market. When we talk about space, we talk about vessels. And looking at this graph is really interesting because you see the evolution of the hire of the vessel and what happened recently in the market. What does it mean for the market? It means that there is no extra capacity available in the market. If you see this increase in trends, it means that all the charter market is sold out and forced all the shipping line to go for a second-hand buys of vessel in order to add capacity in the fleet. We reach the point where there is no vessel again available. So if I have to sum up, in terms of space availability, there is no vessel available on the charter market. There is no space available on the second-hand market. What does it mean for the industry? It means that all the shipping line today cannot find any more vessel for a short period of time. It means that for a short period of time, if you have to replace a ship for dry dock, which means that the ship is going to maintenance, or if you have to cope with a seasonal peak season, like we used to do in the past, especially from Asia, to have extra capacity to clear the backlog from Asia to Australia and New Zealand, is not possible anymore.
Thanks, Rock. Yes, that's very important, and there'll be a slide that will clear even more this scenario. But everyone knows that every vessel, every 2 years, has to go through dry dock, through maintenance, and that time it's where another vessel usually phase in to replace the capacity. We move to the next slide now, and we talk about the equipment availability. And before I hand over this to Rock, the equipment availability is strictly linked to the shipping line strategy, optimizing the cycle of life of a container. I've seen many carriers in this last year repositioning empty to China. Not sure if everyone knows, but shipping line are charging $22,000 from China to the US. We're paying here in Europe $12,000 to $15,000 from China to Rotterdam or Genoa or other ports in Europe. So they're repositioning the empty in China, and they are deciding with drastic decision to not service Australia anymore because they see more revenue in China.
Yeah, Andrea, thanks for the quick brief on the equipment part. I will say in the shipping industry, we have one challenge is to find ship, and another challenge is to find equipment. If you look at the graph and what happened last year, we see that the gray curve is where the stock of a container was before the lockdown, and just after you see this peak increasing drastically, which means that we have a lot of empty container available. When we have then seen the increased demand and the surge of the demand, the stock decreased really drastically through all the consumption from everywhere in the world. What are the impacts for the shipping line and from the customer? It means that on the shipping line side, we have not enough container to cope with the demand. And even after buying new delivery, even after taking some action like equipment imbalance surcharge, even after some action like reducing the booking window and the equipment cycle time, we still did not recover to a healthy situation. What we have to keep in mind is that if you have more than 50% of your container on the ship, it means that you have more ship, more all your container is utilized, and you have to improve the cycle time in order to have a better container rate utilization. And this is really a true challenge today, and I would say the most important challenge that the industry is facing.
Thanks, Rock. Before we move, one thing that came to my mind is that the pressure also put back on suppliers. You can imagine that if before we had, 14 days before arrival of the vessel to load our containers, nowadays we got 5, we got a week. And for suppliers, but even for us to service the same amount of containers in half of the time available, because obviously shipping line and trying to make the cycle time more efficient for the equipment, it's a massive challenge in the supply chain for us as a service provider, and for suppliers as well to cope with that. We move to the next slide, and I wanted to put the container ship time charter rates there. In the past, and Rock touched base on this before, every time there was a bottleneck situation in Singapore, in Port Kelang, or in other ports around the globe, shipping lines were able to lease a vessel for even one trip only. And we used to see those wiper vessels coming in, clearing up the backlog, and off we go on a fresh start. This is not possible anymore because the rates increase exponentially, the charter rates, and also the time frame on contracts have increased dramatically. So really complicated to solve situation of congestion nowadays in the port around the globe. We have some inland and port terminal congestion because of the situation we explained before, how the empty equipment are being handled at the moment and the shorter time that we have to operate. I'm not sure if Rock wants to add something on this. We talk about integrity of schedule and so on. Rock, you want to add something on this?
Yes, Andrea, thanks for passing the ball. Just one comment, if I may. If we look at the global world and the global shipping picture, the congestion is not only in Australia or in New Zealand. It is really everywhere, in Santos, in China, in Europe, in US. If we look at the global map of the world, the congestion is on all the continents. The impact on the effective capacity, if we have to assess the figure, is that even if all the ships are deployed today, all the ships that we can find on the market is deployed today, it is a decrease of 25% of the effective capacity. In terms, we talk about the shortage of vessels, the shortage of equipment, but the congestion is also impacting the vessel availability by decreasing the effectiveness, I would say the effective capacity deployed on the market by around 25%, which is huge number.
Thank you, Rock. This is a clear illustration on how the service by Far East have performed. I'm not saying this because Rock, which is a representative of the Australian Express NEMO service, is here, but it is the reality. A lot of the services have dropped in terms of service schedule ability below the 20% mark. There's a massive disruption in this segment. I'll leave it now to Rock just to talk about how the direct service are actually putting everything they got to maintain their weekly service and the capacity and the commitment to the Oceania trade. Rock, over to you.
Yeah, thanks, Andrea. Building this presentation, we thought that we need to, let's say, to demonstrate what is the impact of all the different shipping disruption that we are facing. Because at the end, what we are trying to do is to serve at the best our customer, and to offer the best service level. If we have to compare the two options, there is one C direct option, which is the direct AX NEMO service, and one CC option with the transshipment. If you look and we focus a bit on the transshipment, we are multiplying the different challenge on the service. The service is shorter from Southeast Asia to Australia. We are talking about 6 weeks. We have to cope with the challenge of the Far East service, which is coming from Europe to Asia, which is today focusing on the Asia market, which is paying sky high. Looking at the two challenges combined with the Far East mainliner service, the short transit time from Southeast Asia to Australia or New Zealand, is even more the case to New Zealand, the congestion in the port, the congestion in the hub, what we have seen is a really decline of the schedule reliability from Southeast Asia to Australia and New Zealand. We print out the Australia, but the same happened for the New Zealand market. So what I would like to compare is what happened on the direct AX NEMO service. Even if we face the same issue in the port and the congestion is there, no doubt about that, what we have is the capability to reschedule the ship, to adjust the rotation. What we maintain at the end is 52 departure. In a nutshell, what I will say is that the direct NEMO service has proven its reliability, efficiency in a tough market condition to offer commitment to customers which are shipping from Europe to Australia and even to New Zealand by transshipment in Australia, with maintaining the capacity all the year. And this is really what matters at the end for serving the supply chain of the customer, is maintaining the capacity deployed and the transit time. I will say, I'm not speaking about the direct AX NEMO service because we are only two to be able to sell this product, but it has proven to be the most reliable service from Europe to Australia and New Zealand market.
We move to the next slide, and it's I think it's a very important topic for everyone, the price and rate trends. We want to know where we're going. Is the madness over, or if it's gonna keep going? We've seen now the past 6-7 slides. They speak very clearly of what is the situation at the moment in terms of capacity, increased demand. I'm not sure if Rock wants to add something, but we are on a strong trend for the rest of the year and also next year. Rock, you want to say something on this?
Yeah, I would say that to make it short, we are seeing increasing costs, limited supply. So in my opinion, and it's just my opinion, but we are not expecting to see a return to normal condition in really a near future. It's really unlikely.
Yeah, also one thing that we need to understand is that the reaction time of the infrastructure around the shipping world is not fast. It's slow. So it will take years for a new ship to be built, terminal to be more efficient, equipment and to build a new container equipment. It will take year. In March, Hapag-Lloyd placed an order of several 350 millions of new equipment. We will see the first Hapag-Lloyd new equipment coming in at the end of the year, just to understand how long is this process. We move to the next slide, and I leave this to Chris and Lara just to explain a little bit more.
Thanks, Andrea. Here in Australia, we expect our volumes and in New Zealand to remain high for 2021. As demonstrated by the notices, our costs supply chain are going up with PSSs and GRIs in terms of transit time. With only one direct carrier into Australia, this is pushing more volume onto this service. Fewer services are available into by transshipment ports, causing even more strain on the direct sailing. And in terms of New Zealand doesn't have a direct sailing anymore, so everything is via Asia. Over to you, Lara.
A couple of other challenges at the moment. One is regarding the ability to de-hire empty containers. Both in Australia and New Zealand, the de-hire depots are at 100% capacity, in some cases more than that. And furthermore, that makes managing detention and demurrage quite a challenge at the moment. Another factor to consider is the New Zealand and Australia port congestion. Industrial action is impacting on the Australian productivity. And in New Zealand, we're still experiencing a number of delays, particularly at ports of Auckland, where it's taking several days from anchor to berth date, which impacts on the arrival into the other ports as well throughout New Zealand.
Thank you, Lara. Thank you, Chris. If you look at the market forecast and what's going to happen the Q3 and Q4, we might sound repetitive on this, but we've seen the peak season surcharge coming in, and we have this massive GRI 1st of July to come in. One thing that is worth to mention, and this is obviously because some of the major importers like the Coles and Woolworths, those supermarket chain, have put forward of about 6 weeks their Christmas order. Before Christmas order out of Europe used to go out end of August, early September. Nowadays, they actually put forward end of July, end of June, early July, before the summer closure. So this is putting pressure in June already, and we've seen unprecedented bookings also for July. We are at full peak season, and we don't see this easy down till possibly September, but we hope for a slowdown for many months. We haven't seen a single slowdown. So, Rock, you want to add something on this?
I would just say that effectively I can confirm that all the direct BCO that we are dealing with is requesting more space every week. We are declining because, as mentioned, there is a really limited capacity that we can offer on top of our yearly commitment. So what we are seeing in the market is not just a seasonal, it starts to be a structural from at least 1 year. And at this stage, what we are seeing is that the peak season is coming, and we are not seeing this end of booming volume. So we hope that, I would say I hope personally, that the market will remain strong like this, at least until mid of next year, 2022.
We move to the option solution and what we learned so far.
Yeah, I will try to make it short, because what we have learned from years now is that shipping carriers have deployed more than ship that even before in this really tough condition and tough market, and have been committed to deliver the best possible service to our customer, despite all the challenges that we have faced, like shortage in crew to be able to operate the vessel, cyber attack, increasing environmental regulation, which is really something that we have to keep in mind, because the new OMI regulation will come in force beginning of 2023-2024 with a lot of challenges for the shipping line. If we look at the past and the profitability of all these shipping lines, it has been years and years that our rates are below our full cost, and we are losing billions of dollars, putting all this investment, I would say all this needed investment at risk. And what we are seeing now is just because for the last 3-5 years we have not been able to sustain and to get some positive margin, but the investment to be able to cope with the variability of the demand has not been made, and result to this situation. So what I will say as a conclusion is that maintaining carrier sustainability is key to keep investing and delivery on the service and to deliver the best possible service to our customer. So what we are seeing today is maybe a EP phenomenon with really high margin, but what I would say at the end is that carrier needs this positive margin to keep investing in the future.
Thank you, Rob. Chris, and you want to go on with our side?
Cool. In addition to sea freight, we also have air freight options available into Australia and New Zealand, as well as a air sea option that's via Singapore, which cuts down approximately 3 weeks from a normal Northern Europe transit time and is about half the price of normal air freight. Lara, in terms of New Zealand?
Into the New Zealand market, we also offer a fortnightly service from Italy, which is based on Korean, which isn't seen as a premium carrier, but what it does mean is again, we can cut down that transit time considerably, and the air freight rates are considerably cheaper than what you would pay using a premium carrier. So, and of course, it's also important to, where possible, extend your lead times to ensure that that you have sufficient time to get your cargo here. Looking at the transits, they are considerably longer than they used to be.
Thank you guys. I'll step in here now. Let's now delve into our Q&A session. I'm just very mindful of our time. It's 4:26 at the moment. We're supposed to finish at 4:30. We might push it to 4:40 just to go through the questions that we get live and also the ones that we received through the registration process. If you are unable to stay on with us until 4:40, don't worry. This is recorded and we will be sending out a copy of the webinar later this week. So let's get started. The first question that we have is from Paul, Mickey, and Indu. This is probably best for you to answer, Andrea. Please provide pricing and capacity forecasts for the next 6 months.
Okay, we spoke about this through the presentation. The capacity is under extreme pressure. We are trying, as everybody else, to increase our allocation with our partners. Being the number one mover from Europe to Oceania, we are able to satisfy those requests. In terms of pricing, I think, and I'm not giving an assist to Rock for this, but I think in October, with the next peak season, we might see another increase there, but that should cover this 2021 rate increase.
Thanks, Andrea. The next question is from Vince. He's asking, can you please provide an update on transshipment services and any delays to be expected? Perhaps something that you can help us with, Lara and Chris?
Sure. So at the moment, we do measure our transit times, and what we're seeing is an increase overall across transits. And it's not always just one vessel. You can expect a delay of, we're seeing in some cases 14, 21 days delay. So important to factor that into your lead times as well.
Great, thank you. Our next question is from Carol. What solutions are Mondiale VGL and the industry doing to restore normal conditions? When do you anticipate conditions to improve? And what is Mondiale doing differently to other freight forwarders in tackling the current situation? Andrea, if you can help us out with that one.
Yes, I'll answer this. Obviously, I said before, we are in a privileged position because we are dominant in this trade, and it's helping us to get away around things, problems that if you don't have a location, you'll not be able to solve. It's a long-term process. We won't be able to restore the situation alone. It's something that the shipping line, the terminals have to do, and it will take time. As I said before, we are in constant contact with headquarters in Geneva for MSC, in Marseille for CMA, in Hamburg for Hapag-Lloyd. We talk to the people that make and shake the market at the moment. So we come with suggestion and critics as well on how they operate, and we try as much as we can to bring your voice to the carrier. That's what we doing at the moment.
Thanks, Andrea. I actually have another one for you, very popular this afternoon. I've got another question from Dave. He's asking, can you please provide information regarding storage costs at origin caused by the shipping lines changing schedules?
Yes, that's unfortunately, importers have this risk depending on the carriers, but it's happening all the time. There is disruption on schedules. Therefore, if you collect an empty containers thinking that the vessel will arrive on time, then the vessel is delayed and you keep the container longer, unfortunately, the risk is with the importer to pay those charges, and it's unfortunately something that we cannot avoid.
Thank you, Andrea. Our next question is from Frank. Perhaps something for you, Andrea, to answer as well. Can you please provide a more detailed update on the situation in Italy? How are imports from Italy getting affected by the current market?
As I said before, we got in excess of 300 TEU allocation per week out of Italy. So we in a very strong position. When we go over this allocation, we face challenges like everybody else, and that's when I call Rock and I ask for a favor, basically. But so far, we've been planning ahead as much as we could, and we were able to satisfy all the demand that we had.
Thanks, Andrea. Going now to all the live questions coming in through the chat box. Again, if you have any questions that you'd like to get answered live, just go onto the chat box and write your questions down. We've received a note from Dennis and from Robert. They're requesting for a one-page summary of all the issues that we've covered through this webinar today, and we'll prepare that for you and send that out by this week. We have also sent out 2 weekly market updates last Friday and the Friday before. Both of those actually covered some media coverage in regards to shipping issues we're having here in Australia at the moment, if that's going to be any help. So we'll get in touch with you, Dennis and Robert, and we'll send through a copy of those weekly market updates again. This is for Rock. It's a question from Yvonne. Hi, Rock. I note that vessels are being closed well in advance of ETD. What is the current first available vessel from EU on the NEMO?
Good question. If I may, all is linked to let's say all the issue that we are facing today. And in order to not having container block in the port, the vessel is delayed or we adjust the schedule. So we are taking some measure to not take booking so much in advance, and we are closing vessel as early as we can to, let's say, try to mitigate the impact. First vessel available today, depending about what status. You know that we are working with, let's say, a full list of customer, and every customer has a different status, which is linked to the performance, the relationship, and what we have used to ship together. Depending about the status and with the different system that we have today on the CMA side, if you are a status that we call an elite or a VIP, you can take booking 4 or 6 weeks in advance and until you reach your allocation. It means that we are segmenting all the customer, giving allocation like Andrea mentioned to customer. And if you are Mondiale VGL, you can book until you reach your allocation, and vessels are all open. For the remaining part of the customer, basically all the floating cargo which is coming on top, I will say today, the first available vessel is, let me look at the agenda, is the 3rd week of July, so in 1 month.
Thank you, Rock. We've got a question here from David between you, Andrea, and Rock. David is asking about stock that's stuck in hubs. What's happening with those at the moment?
I can try to give some highlight. What we have seen is massive congestion everywhere, and all the relay option. What I mentioned to you, we are CMA not only offering the direct Australian NEMO service, but we are also offering some allocation on the transshipment option, either via Kingston, which is the Caribbean transshipment option, or via Singapore or Port Kelang. Looking at the 2 hubs, the situation is the same. We have seen some vessels really disturbed, and I will say that our service, which is taking the cargo from Kingston to New Zealand, is the Panama service, which has faced a lot of issue in Europe, US, Australia, New Zealand, and even in the Caribbean. If you look at the schedule, we have been forced to take some measure to omit some port and to cancel some voyage. What we are trying to do today is to protect the space to evacuate the cargo, which is still stuck in Kingston, or even to push the cargo by a faster way with backhaul service to Asia, going directly then to some port where we have capacity from China, South China to Australia, New Zealand. So what we are seeing is this disruption is affecting even the products that we are selling to our customer. And for the stock in Kingston, from what I have understood, and it is something that we are following up on a daily basis, is that all the containers should be shipped in the coming weeks. So that should solve the issue. as the capacity has been released on the last vessel, which was the Marius, all the cargo should be evacuated soon.
Got a question from Adrian, and perhaps this is something that we can cover if we can, Australia side, New Zealand side, and Europe side. He's asking, are we experiencing any shortage of container truck drivers like they are experiencing in the USA?
Europe, yes, is the same situation. There is a shortage of drivers, and it is becoming a problem as well in Europe. With Europe is that we have a very strong rail service, so the impact of that is not causing enormous problems, but yes, starting to become more and more visible.
Thank you, Andrea. Did you, Lara or Chris, want to comment?
Sure. So on the New Zealand side, I mean, we're experiencing labour shortages across the board through a number of industries. But I think one of our bigger problems with the trucking is actually the trucks aren't utilised to the best of their ability, just simply due to the wait times at the ports, the additional moves required for trying to de-hire containers. So yeah, we're just really underutilising the truck.
Same applies here in Australia, exactly the same.
Thank you. Thanks, guys. We've got another question from Kevin. He's asking, what are the typical shipping delay timeframes? Transshipment was addressed as 14 to 21 days, but what is the average overall timeframe lag being experienced per sailing?
I know I can answer that from the New Zealand perspective, from the transit times that we're measuring. So across the board, when I looked at the Europe and Mediterranean transits, we were seeing an average of 14 days longer than what it had been in 2019. So just to give a bit of a comparison on what we're looking at as an average, but some of those were as little as 6 and some of them were as high as 20.
And for Australia, we're basically 7 to 14 days in addition that we're seeing at the moment. It got out to 21 days, but it's in a little bit now.
Thanks, Chris. Thanks, Lara. I think that's all the questions that we've got submitted this afternoon. If you have any other last minute questions, please put them on now, or else we will probably close for the afternoon. So I think that's about it for today, guys. I just wanted to say thank you. Thank you so much for joining us, and please don't hesitate to contact with your local Mondiale VGL representative if you have any questions.